Well, the National Australia Bank has become the first of the big four to cut its fixed rate mortgages this year. The big lender's 3-year fixed rate has fallen to 5.84% following a 5 basis point cut on Monday.
It is the second time in less than 3 months the bank has made cuts to its rates and comes just weeks out from the RBA's first meeting of 2025.
For more, we welcome back Seven Finance expert Gemma Acton. Hello, Gemma. Why has the NAB made this move so early on?
Well, NAB's gearing up towards this first big RBA meeting of 2025, just under 2 weeks to go now. They're expecting, or economists more broadly are expecting, a 0.25% rate cut. That would be our first rate cut here in Australia since November 2020. And so that's what NAB cut its rates up to on some of its other fixed loans. If we talk about that in dollar terms, that would be around, if you're looking at a $600,000 loan, which is around the average, about $92 a month. So not all that much when you consider rates have gone up by over 4% in the last few years, and people are paying hundreds, if not thousands of dollars more, but a start, and people will certainly be hoping it'll be the first rate cut of several.
And other lenders will follow suit here, won't they?
Absolutely. This is a highly competitive market for home loans. So you have the big banks all walk pretty much in lockstep, and then you have the smaller lenders who try even better prices to try and win over customers. So if we do see a rate cut in 2 weeks' time, then we can expect to see even more activity. More people will look to refinance, and banks will try and win new customers.
Of course, we welcome it, but they do it for good publicity, don't they? Do they do it thinking they can get a leg up on the other big banks,
yes,
and so people will be attracted to them? And
they really want to win new customers. You know, they don't want to lose existing customers, but there is a real fight to win over new customers.
OK, now let's move on. Renters in Sydney and Melbourne could be entitled to discounted utilities and up to 2 months free rent. Right? Why are landlords offering these? This is a real shift.
Look, Larry, it's been a landlord's market for a long time. Rents have been going up for the last 3 years at a very fast pace. The tide is finally turning. You know, renters have had a chance to make moves in the last couple of years. Some have moved back in with their parents, some have moved in with friends, some have downsized, some have moved to cheaper neighbourhoods. So suddenly there's less demand for rent, particularly in prime locations and prime properties. And so we're seeing landlords say, OK, look, have a couple of weeks of free rent if that means I can lock you in for the next year. So for tenants, this is the first sign of some good news. OK, so hope on the horizon for renters? Yeah, look, if you look across Australia as a whole, it's lots of different rental markets. Every area has its own rental market depending on how many people want to rent there and how many properties are available to rent there. But broadly speaking, yes, certainly we're seeing at least rental growth flatten out, if not slightly turn down in some places.
I've got some retail headlines to get through, and Coles is drastically reducing the number of products on their shelves, right? They say it's going to make shopping easier.
Yes, so around 2,500 products are being reduced by Coles. Sure, some customers might like less choice, but I think a lot of customers like choice. You know, they like the range of options for taste and for price points and for sizes. Usually when supermarkets scale back the number of products they offer, and it does happen from time to time at different supermarkets, it's more about profitability and managing the relationship with suppliers. OK, finally, reports show that retail sales are growing again, that consumer spending has lifted for the first time in 2 years. What does this mean for prices going forward? So if you look at consumer spending from month to month, it can jump around a little. What is definitely fair to say is that in December, people spent a little bit more than they were expected to spend. Lots of reasons for that, partly because there is hope of an interest rate cut on the horizon. Inflation has been cooling off a bit. There has been some government help, for instance, on electricity bills. But what we're also seeing is people really like promotions, obviously. People will wait for sales, and retailers have been giving that to them. So to keep up the spending, we are likely to see retailers keeping on promotions, discounts, sales. It's a pretty tough time for retailers. We saw Katie's and NAB and Rivers and Rockman's announce they'll all be closing in the next couple of weeks or months. So it's not a great time. Retailers will be really looking forward to a rate cut, but for consumers, we can probably expect more sales.
Some good news for consumers, finally. Gemma, thank you very much. Good to see you.